Hello everybody and welcome back to our special weekend edition where we talk about stocks, commodities and cryptos in the markets right now. There was little doubt that last week was a critical point and we talked about the 50% fib retracement on the Nasdaq, SP500 hitting almost a technical bear market and of course the crash in the crypto markets. But there's so much more that's going to happen this week and of course that means there's tons of opportunity and also risks out there for everybody. So let's talk about some of the key levels right now together and look at the news for the week ahead. See you soon. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities and cryptos. We'll start here by talking about retail sentiment because it's absolute paramount that we understand what retailers think and what they're usually thinking if they're thinking it too much can be something we can use against them. Yeah, that's right. We often trade against our brothers and sisters. And unfortunately, that's because that's what the street does and the markets take advantage of our human psychology. So extreme fear is the current reading sitting around 12. So of course, that means that it's pretty negative out there in general retail land. If we look at some of the surveys of what general retail investors and traders believe is going to happen in the next 6 months, most people are still pointing towards bearish, a little bit of a switch towards neutral, and the bullish component actually went down a little bit. And what do you know happened the day after this survey was reported? Boom, goes the dynamite and the market went straight back up. Of course, it is trapping everybody into both situational camps. You can still believe the markets are bearish, but that doesn't mean there isn't going to be a rip rally first. And we'll look at those levels very, very soon. Sentiment reports in general are just incredibly negative this year. You'll notice here, 2022 versus every other year, it's one of the lowest, well, it is the lowest reading really in the last almost 30 years. So let's talk about here. I mean, I can't believe it's lower than 2008, really. I mean, that was a serious time, but this is what the people believe. And of course, we need to pay attention to that. And we can often see this manifest itself in options pricing as well. So that's something we'll look at later on today's video when we cover the main indices and of course the main stocks moving forward for the week ahead. Let's also talk about the general world right now. So how many markets in the world are in bear markets? Well, funnily enough, more than you might suspect. Over here where I am in Australia, we're actually not even close to a bear market. We're doing pretty well. But that's because we have a three-pronged market. It basically has finance, commodities, and really metals. That's it. So energy and metals. And because we have those things, they're doing well in the inflationary environment. The US got dangerously close entering a technical bear market. And as you'll see over here, a lot of the world is actually in a massive correction right now after that huge rally that we saw after the pandemic. Interesting stuff there. Another thing that I like to look at and when you're figuring out whether markets are completely overpriced or not is by looking at things like forward PE multiples. Now, obviously you can bring in things like Schiller PE if you're not sure of what that is. Maybe you want to go look that up on the internet. But realistically, this is a good reading of how overpriced the markets are. And at this stage, we've just entered a territory where it makes it kind of slightly more palatable. It doesn't mean it's good. It just means it's slightly more palatable. When you hit things like this blue, or of course we hit these yellow areas, that is 16 times forward PE or 14 times forward PE, the market becomes, I guess you would say, inverted commas, undervalued. And they're the areas where it's really worthwhile considering your next moves, of course, if you're going to follow Warren Buffett's be greedy when others are fearful. That's certainly the key levels. We're not quite there yet, but I thought I'd bring that up anyway. Let's move over to Friday. So what happened? Well, Friday was a day of every single one of the hated stocks went ballistic. Things like Apple bounced off the supports that we found. Things like Amazon bounced off the supports we found. We talked a lot about those ones. We also spoke a lot about all of the technology stocks in general, and they just blew up. Like they were going really, really well for the session. And that doesn't mean they're out of the woodworks, but they did very well. That meant that, of course, the best two reporting indices for the day were the Nasdaq and IWM, but they have left large gaps in the market. That is a difference between where they closed and where the futures market traded to, and then of course the open of the stock market. So this only tells one of the tails, and we'll look at that later. But basically we got a rally early in the morning, followed by a sell-off directly back to those levels, and then a nice pickup into the end of the day. And we know that if the market's buying into the end of the day, That can mean good things because, of course, Wall Street is usually the ones that are purchasing there. When you look at sectors, it was pretty clear. Every sector that had been recently sold off heavily was doing well. Clean energy, solar, semiconductors, they were leading, and some of the defensives were doing a little bit poorer. So things like XLP, XLU, utilities, etc. Defensive sectors, not the ones of the day, which makes a lot of sense. So how did we derive that that could have been the bottom? At least for now? Well, a lot of it was just due to pure statistics. And I would like to say a massive shout out to the Discord community, which you can link in the description down below if you want to join the public one, and the stat finding of some of the members. So basically we were talking about statistically unlikely things. And one of those was that we would have over 6 weeks down without having a week up. And this goes into our next kind of week, because remember, we just ended 6 weeks down in the stock markets. That's statistically unlikely, and it usually leads to at least some green rip momentum before the market makes its next decision. So it was a lot of sleuth finding there in terms of this data and the stats, plus we brought it together with the technical analysis, sentiment reports, and everything else. So it's a really well-balanced way of looking at the markets. Remember, we don't want to have bias here on the channel too much, although of course it does come in a little bit, because in general, if we can use enough quality information that's separate and understand what the street might be doing, then we don't have to have as much fear or greed when others do so. Let's talk about earnings beat data. What's going on there? Well, it's still pretty good. 70% beat data, 1,376 versus 603. Yeah, that's right. We still are in earnings, and that continues this week. But in general, the current earnings has been okay for the market. It's just the forward earnings that really the market's caring about because of inflation and other things. What about the fear index? Well, here we have the VIX, the volatility index. And we always talk about 35 here on the channel because 35 is a massive level. When you hit 35, you do tend to often hit peak fear. And if you hit peak fear, that often is an area where you might want to dive into the SP500 index, look for technical support. And if you find it, possibly it's a level for you to be looking at, completely alter to what everyone else is doing. And that's what happened in the previous week. We hit that level, and obviously we've bounced off that so far. Put call ratios actually just dropped underneath. So that means that we're more people entering into calls suddenly than puts. Interesting. First day we've seen that in a while. But in general, the stack of puts that you'll see later in today's video is massive, guys. It's still huge in terms of how much is expiring in what is an incredibly important week of options expiry. It's the third week of every month that is the big one for options traders. US 10-year rose a little bit on the Friday session. We do expect that to bounce a little bit back into this box. Obviously, we talked about how we thought the 10-year had probably hit its peak last week. It did, and then it bounced down, it moves up. And we actually look for it to go through this level here to really show us that it's solidified its ability to actually go down. But for now, I still think inflation may have peaked, and that this will turn around on the smaller timeframes. And that's going to lead to some interesting things such as treasuries as well. So we talked about treasuries. This is the 20-year bond. A lot of you guys probably discount bonds and say, oh, they're useless and stuff. You've got to remember the bond market's huge, and the bond market is basically debt of businesses. So when you look at this, obviously this is treasuries, but you can also get bonds for the companies. And when you think about the runs, this is the first run, this is the second run. Remember, that's a false break there, so we're taking it from the peaks here. And if we expect, let's say, a turnaround here, what we could also expect is look at this move. Obviously very similar, coming off support from 2018, similar US 10 years back then. So maybe there's a little bit of a relief here in treasuries as well. Some interesting things also happened in the DXY. Let's break this down. So this is dollar is king at the moment. Obviously the US dollar, safe haven, people have moved into it. Let's just have a look here at what happened on the market technically. So the market on the 1 hour made a new peak. It obviously had a trough in between, and it actually made a new low there coming into the close of the session. So you'll notice that we had a little bit of a lower low followed by a rip rally. And now, of course, we're moving down. So there are some other key levels. There's a little bit of noise in here, but I think this could be the first stage of what we've considered could be a distribution here on the DXY. Remember, we're watching this 103.45 zone incredibly closely, and I'm just scroll this out to a daily here so everybody can see what might be happening. Actually, we'll use a 4-hour chart, might be cleaner. So what if we had a market that came back into this range and broke through this level? Obviously, at that point, we'd expect a rip, maybe back into the 104s. And then what if it made a new low? Could this be a massive Wyckoff distribution of the dollar index? And of course, if the DXY is dropping, that is cash, where is that money going? Is it going back into bonds? Is it going back into the stock market? I think it's worthwhile following the dollar index or following the channel here. Please subscribe because we will be covering this. I think it's very important to know what's going on with DXY during crash-like conditions, which is what we're in. So we'll continue to watch that. For now, it looks like the dollar could be turning a little bit on the smaller timeframes, but be careful out there. Now, if the dollar turns, what's that going to mean for things like gold? Well, gold becomes an interesting one as well, especially if we see a drop in inflation. Yeah, you heard me right. Gold could do quite well if that actually does occur. So it's coming into a big box zone for me. Now, that doesn't mean, oh, wow, it's time to buy gold, let's go. But it certainly is coming into a zone where it does tend to find buying pressure in the past. So let's have a look here at the daily and just check over here at the huge demand levels that we saw in the past. So we saw some massive demand here. I remember literally on the channel, we were talking about gold incredibly bullishly here. And I guess we were correct in that stance, but we obviously were bullish on gold since December of last year. So the gold bulls did buy in pretty heavily around this zone. We do expect them. You can already see it's tried to bounce once. We're expecting some kind of fireworks to occur in here. So we'd like to see gold kind of do something like this and then move forward. And if it does do that, then hopefully we can kind of try to pick some bases here, because I'm not lost on gold. I just think the gold needs to show what it's doing right now. It's alter to what everybody else thinks it's going to do. And I think it needs to just show us some kind of change of trend. And right now it's still very negative. If you go into something like a 1 hour time frame, it's going to be hard pressed for you to say, oh, gold looks great, because frankly, it really doesn't at this stage. But, you know, if we breach through things like 1828 here, this resistance high, we're starting to put in place the change of trend coming into a box zone demand that I think we certainly do believe in. Natural gas is kind of similar in some ways, except this is more of the opposite. Natural gas had some big blow-offs. So it blew off here. We obviously got the pick up to the 61.8 and a bit of the sell-off there. And this time around, it's blown off again. And what that usually means with natural gas is if you look through the history of it, it's very, very susceptible to huge moves. And often once it had one lurch, it has a second one, pulls up. We were hoping for the 61.8, didn't quite get there through the Friday session, and then it can sell off. So yeah, look, natural gas I think is a bit of a dangerous play right now, but obviously the sell side seems to be something that I think a lot of people may look at. Let's move over to Tesla. So Tesla bounced, but there's a lot of struggles here, I think, for the stock. We've got Elon with the whole Twitter thing going on. You've also got, just in general, how has this stock maintained so well through a mass sell-off across PS ratio and PE ratioed stocks that are in this kind of category? So it's done incredibly well, but I would caution, I think, people in this one. It looks very interesting and very shaky. When you look at it, actually, I'll just go back to a weekly here just to show everybody. This is not healthy, okay? In stock markets, you don't want to have mass euphoria followed by big sell-offs and rallies and sell-offs and rallies. These types of markets can often lead into something a bit more horrible in the future. So just be careful there, everybody. But we do cover it daily, and obviously we're looking for the bull side and the bear side. If we look right now, it's going to be hard pressed to really pick too much on Tesla. It made sense for it to stop around here, but as this Twitter kind of thing continues to go through, I think there's going to be a lot of volatility here, and you're going to have to stay more in the moment. I feel like there's better technicals out there at the moment than Tesla. I think Tesla's a little bit hard to read due to the noise. We'll look at the SP500 and Nasdaq, and that will maybe make some more sense. Let's move over to Apple. Apple bouncing off that exact zone we had boxed up. Perfect off the bottom there. Congrats to anyone, I guess, that's in that kind of thing. Nice work. We also had the long leg doji on the Friday session, which is like an equilibrium candle. So we had the low, the high, the open, and the close. Obviously, we've closed above that. That can mean that we've just hit a temp bottom, and any pullback is probably going to be met by big demand, I would think here. And actually, Apple closed its gap as best it could. So if you look at it on the 1 hour, it actually sold off, and look at that, boom, and then rallied back up. So Apple looks relatively positive, but I think it will still work with the stock market, and levels that we'd be looking at somewhere up here around that 152. I could see a little bit of resistance. We've got to remember, sentiment's still bearish. So even if it goes bullish, markets will still sell the rip. That's still the story for many, many traders and investors out there. And I think it also makes sense to knock out a lot of weak hands. Amazon bounced off a huge support as well, hit down that 2040 area, which is exactly where we had that huge resistance become support. Bam, straight off that level. But again, coming into a zone moving forward where if it gets to like a 2450, I think there's going to be a lot of resistance around there as well. And it would pay to go on the smaller time frames and have a look at the market structures. There are problems leading forward. Things like even this 2300 here on Amazon, and then realistically around that zone I've got here with the top end being 25. That area there, you expect any rallies to come in here to at least have some problems. But most of the market right now should be broken down to looking at the big ones. So it's really worthwhile paying attention to the biggest indices and then figuring out what's going to happen from that standpoint. So we talked about these levels here, and we obviously talked about IWM from a perspective of what's going on the larger timeframes. We had a gap here, which never has filled, but we do have, of course, resistance, support. So these levels are very interesting for the buy zone, and that's why we suspected, again, the markets were coming into the correct level. But there's also problems in the future where, let's say we get a similar pullback to last time, where's that going to take us? So remember, this market is currently moved in a wave. It's moved in this first wave, it's moved down to the second wave, and now if it pulls back similarly, we go back into around that 188. So very interesting zone there. And that is consistent with what we're seeing with a lot of other markets. Let's look at Nasdaq. Nasdaq ends another week down. What does that mean? 1, 2, 3, 4, 5, 6. So 6 weeks down technically. And that becomes statistically unlikely, as we know, with the SP500. So we do expect some kind of relief. But as relief occurs, there's going to be sell-offs. And those sell-offs are going to look brutal, taking out, of course, the weak hands as the market tries to rally. And we've talked about the distances and ranges. Again, if we took the distance from the top to the bottom, we extrapolated that out, which was our argument for last week. Look at how it hit that bottom. So if we're moving in these types of waves at the moment and we pull this back up, where do we expect the market to go? Well, funnily enough, you'd expect it to come back pretty heavily, actually. And there are going to be problems, big problems along the way. Most notably, something like the 12,500 zone actually on the Nasdaq. So let's just have a quick look here at the 1 hour together and check out some of these zones. So we mentioned that 12.5. Why would we mention that? Well, it's because of all the previous sell-offs that have occurred here. There's clearly some supply in here, and this level you would think might be met by some sell demand. Then after that, you've got 12.8 kind of level, 12.750. And that's going to be a little bit of sell. So there's going to be some great day trades in here where it's going to go things like, possibly like this. Maybe we even fill the gap, which is what we'll talk about when we talk about the Nasdaq and the S&P. And it breaks through here. What if we go up to here, then back down through that level, and then, of course, thread the needle into something like a 13.5. Big zone up here. Huge level of supply. Something's very strange going on in that section of the market. So this is something that you've got to expect moving forward in the week. And we, of course, will bring in our daily analysis each day as we see things play out and things become more statistically likely or less statistically likely. Let's move over to the S&P 500. So we mentioned this 4,025 zone on the last session, and it got right there and sold off a little bit, and then it rallied back into that zone. Now, it hasn't sold into the gap range, and that gap range opened and closed between like 39.25 and this level here, which is around 39.67. So there's a big gap sitting there. Now, obviously, gaps can sit there a lot. You've got a gap over here. There's gaps from previous times. So they don't have to fill, at least immediately. And generally, if they fill in the first couple of days if they're going to do anything. But I would warn, there is a gap here. So remember, if markets come down and if you are bullish for whatever reason, oftentimes below the gap is where people will try to demand the market again, and they'll try to pick that back up. So that could be a scenario moving forward this week. If we breach this level, the next level is obviously to fill this zone. And I have a feeling the market's going to try to rally pretty heavily, possibly trying to go back to something like a 41.50. And that zone is huge. Now, if you bring it up on a volume profile, which we'll do together right now, you'll notice one of the ways we derived this zone here, this 4,025, was using a volume profile. Obviously, you can load that in TradingView if you'd wish. And this zone, it just makes sense. You've got a lot of doji candles. You've got a lot of potential supply in here. And that's why we thought there might be some selling from there. And realistically, there was some scalp selling on the Friday session. Now, we breached that. Where's the next zone or area we go to? So let's have a look here based on this previous level. And you'll notice it comes in around that 42. But if we actually scroll out even further, you'll pretty much find that 41.5 area comes up a lot. And that's because there's so much touching to that zone. So 41.5, big zone, and then just clearly as resistance here or supply, we've got something sitting around 43. So I think they're the big levels for us this week, 41.5, 43. And if you're a seller, let's say you're a bear in this market, you're obviously hoping it sells off this level, fills that gap, and then makes a new low. And if it makes a new low, hey, you can celebrate. At that point, you've got to be careful because it could be like a false, obviously, pull. But if it does, I think it's just going to be more sell the rip. And remember, if you're a bear, there are zones that you can still target. Even if we have a slight bullish bias here because of just the general sentiment and the general way that the markets move and they like to retrace and all of those things. That doesn't mean when it gets up to those levels, there isn't big shorts, and there's still a sell the rip mentality. So you've got to remember these levels could be targeted zones for your systems in the future, and you bring in those kind of areas and figure out the turnarounds. And they're the zones that I think, you know, some bears will try to target and try to manipulate back down. Let's talk about options, because options is a huge part of the market. And we've noticed that a lot of puts have been opened in the last couple of weeks as fear became huge. So you generally want to see options sitting around your strikes. That is, if you believe, let's say 430 is a huge level of resistance and there's a huge amount of calls coming into the end of the week sitting there, there's a good chance the market will respect that level as well. Remember that. It doesn't really want to pay out some of these, but take a look at some of these numbers, guys. They're huge. 100,000 plus open interest on 360, 380, 400. The spread of fear was very, very successful over the last couple of weeks, and the market may want to try to hold above this week just to make sure it doesn't pay any of these out. Remember, it's in their best interest not to pay those orders out if they can and create what many people call max pain. Now, max pain is actually sitting at a 430 this week. That would be a pretty big rip rally. Interesting, it's sitting there after what we've just talked about, but that's where it is, 430. It's sitting right on it. So yeah, there's a lot of puts. We'll have to watch this story as it unfolds for the Friday expiry. They got pretty close to actually perfect max painting last week at the close of the SPY. So they did a very good job of making them maximum amount of money. And this is something that, you know, is worthwhile considering. Obviously, not every week isn't the crystal ball. It's not like the golden goose or anything like that, but it's something that does happen in markets often in terms of manipulation. Let's move over to Bitcoin. It's pretty, I guess, lonesome on the crypto world right now. Look, Bitcoin's doing its best to try to hold the previous demand zone. It's obviously taken out every stop loss underneath here. It's created a huge amount of panic and fear due to Luna and everything else that's going on in the crypto markets. These are the next box structures I have underneath this zone if it does breach. And the weekly is probably pretty important. Probably needs to hold up. And I wouldn't be surprised at all if the rest of the stock market recovers. You've got to think crypto is going to have a go at recovering as well. And I believe a lot of bears are feeling that same thing. You can see here BTC shorts continues to reduce. They shorted heavily and now they're going back into possibly being a little bit more net long because they know the critical level that the markets are at. If you haven't already, come and follow us over on FX Evolution on Twitter at FX Evolution. And we always post up things that are interesting for the days ahead and things like that. So definitely come follow us there. And remember, there's a lot of news coming out this week. So we've got some big ones. Let's just go through it together right now. This is all around the world and things that are going on. Obviously, we've got core retail sales, 8:30 a.m. New York time in the US. That's going to be a huge one, guys, and massive. And then we've got Jerome, the Papa himself. He's coming out at 2 p.m. New York time to really just give us so much great news. Yeah, right. Who knows what he'll say. And then we've got some CPI coming out of the CAD and ODD and other things for the week. So it's not a huge news week, but of course, all eyes will be on Jerome as per usual this year. And that's Tuesday, May 17th. So just remember, this type of events, they do move the market and we need to be aware of them. If you enjoyed the video today, guys, please remember to subscribe, smash that like button. It really helps us out. And thanks so much for supporting the channel. And we'll see you in the next one. Bye for now.